Hey everyone, welcome back to the channel, your number one source for income-oriented investing. It's time for another episode of my monthly series where we will go over the high-yield income landscape. This episode will cover the Canadian stock market, so funds listed on the Canadian market. For my Americans friends watching that do not invest on the Canadian market, the U.S. market episode will be out Sunday, bar anything too crazy happening to me, like getting hit by a bus, but no, actually, there's no buses around here. Anyway, you know what I mean. So, as usual, let's go through what the market is doing, the major indexes. I'm filming this on August 5th, and it's a disaster. It's an absolute disaster today in the last couple of days, the last week. Markets finally have started correcting, have started selling off and tanking. So the S&P 500 down 3% today. If we look at the last month, it's down about 7% in the last month, really starting at the end of July here. Again, I'm filming this on August 5th today. And same goes for the NASDAQ, all the Russell, all major indexes as well. If we look at, in the last couple of days, it's been really bad. Last month, the NASDAQ particularly bad, even worse than the S&P, minus 12%. So big sell-off with technology. NASDAQ, as we know, is a little bit more technology focused. The Canadian market, which is actually closed today, can't think of a better day to have it closed. But I'm sure when it opens tomorrow, it's going to catch up with the losses and do a massive sell-off as well. Maybe not as much because it's more energy and financials focused, but it looks like every sector, just every equity sector is pretty much selling off, and even the TSX 60 having a bad time lately, but not that much in the last month. So it's finally looking like financials and things like energy are, starting to outperform maybe technology. But, we got to look at things in a long-term perspective. VIX has spiked today, insane. It's almost at 40. If you just look back at the last 5 years of the VIX, I haven't seen anything like this besides 2020. This is a massive spike, which just means there's a lot of volatility, a lot of selling, much more selling than buying. So guys, stay calm, keep focused. This is completely normal. I'm not bothered by it at all. I have experience. I've seen this before. I've been through it before. I mean, if you look at just the S&P 500 in the last year, it's just been going. It's still up significantly, even including the last couple of days of carnage. It's up significantly in the past year. So I love how now everyone's panicking. Everyone's trying to figure out what's going on. It's just insane. I was on maybe the news for 30 seconds before I got annoyed and closed it and went outside and did something. Because nobody knows. Everyone's just trying to figure out the reasons and why. And, people in Japan selling off. Their interest rates are rising, so they had to sell off equities. Guys, the reason why is because there's more selling than buying. That's really the reason. You can't really predict all the factors or know all the factors that's going into it. But I love how, when the market goes up and up, nobody ever talks about that. Everything's fine and dandy. But then when there's a little correction, a little crash, everyone's panicking. So stay firm, stay the course. Remember, we are long-term investors, long-term income investors. Reinvest as much as you can of those dividends. Now's a great time to buy, of course. I'm looking forward to my monthly buys of the month of August. I can't wait for that. So, I personally don't really watch the news or follow or try, but if you are interested, there is a cool app called Stock Pick. I do have an affiliate code where you can get 25% off. They're not a sponsor or anything. They just were kind enough to give me a code for you if you're interested. It is a nice tool, a nice app on your phone where you could get, it's designed for retail investors. I think you could try it out for free for 2 weeks. So try it out for free. If you like it, you could sign up for a year, get 25% off with my code. So make sure you sign up with my code. It's in the affiliate section and the video description in the affiliate section below. If you're interested, and if you're not, well, you could just cancel after 2 weeks and no harm done. But it's not that expensive. It's like, I think $60 American or $80 US or $100 US, something like that. So quite a big discount, 25% off if you're interested. So moving on, everyone, let's go through the Canadian listed income funds. We're going to focus on the more diversified index based as usual. Then at the end, I'll try to tell you which sector I feel is the most undervalued right now. Maybe some funds you could look at or capitalize on. But either way, when the market's like this, right, and everything is a great buy in my opinion. So let's start with, of course, the all-in-ones. We're going to start with HDIV. From Harvest. This is Harvest All-in-One, who is the sponsor, the official sponsor of this video, a good friend of the channel. I'd like to thank them for sponsoring and continue to sponsor this monthly series. So HDIV, by the way, as well as a bunch of other Harvest ETFs, have the distribution increases have taken effect. So if you look at the distributions of HDIV, you do see here that the latest distribution, the payout for August, the July distribution, and the payout for August, you see that the distribution has increased. So this has taken effect for multiple ETFs, including their technology one, their brands one, their leverage technology one, et cetera, et cetera. So fantastic time, of course, to get in and into any of these really that have the entire market, the entire equity market. Don't forget, if you want a little bit more stability, if you're really more of a conservative investor, you want to mix in some fixed income in there. It's not my favorite thing to do. I like to go all equity, but some people just love that classic 60-40 split. They do have a great option if you're an income investor. If you like that option and you're an income investor, you could go with HBIE. This is a leverage version. They also have a non-leverage version, just like HDIF, right? HDIF, I always show the leverage versions, but you guys know that there's unleveraged versions as well. So you have HBIE, which is about 60% stocks and 40% fixed income. So obviously you're going to get a little bit less volatility, more stability versus all equity like HDIF. So make sure to check out these options. HBIE did not increase their distribution. This is a relatively new ETF. So still a very stable 20 cents a month. Very stable distributions is what Harvest is known for. Of course, I think HDIF, by the way, they also changed their composition a bit. They have no fixed income in here whatsoever anymore. They used to have Happy Tea. Then they put the medium term one. I think now they replace it with the industrial one. So it's a full equity here, ETF. And one thing that has been doing pretty well is Happy Tea, which is the Harvest Premium Yield Treasury ETF. Very popular, very, very high yield. I actually reintroduced it in my portfolio because I feel this is great timing. Interest rate cuts are probably coming in September on the U.S., so this would be a good ETF to have. Very, very high yield, very big, very popular, almost 500 million in AUM, which is pretty incredible for a bond ETF here. And it mostly invests in TLT, right? TLT, I think, is the only thing that's actually doing well in the last couple of days because, of course, it's long-term government bonds, and when everyone's scared and running for the hills, they typically put it in TLT or long-term government bonds. This is basically a TLT with covered calls on it. So moving on, Hamilton funds, HYLD and HDIV, they're two all-in-one. So no particular news for HYLD here. Distribution still consistent, 14.3 cents right now. HDIV just celebrated their 3-year anniversary. I do have a video coming up. This is what started it all, right? The first all-in-one leverage type covered call ETF. So Hamilton was kind enough to provide me some great documentation, including how HDIV evolved throughout the years, throughout the last 3 years. So we'll take a look at HDIV in detail. Fantastic fund to hold if you want some Canadian exposure with a bit of US exposure, but it's also very unique that it's not full income, it's not full covered call. There's also some growth in there as well. So very, very unique fund that continues to do its job and outperform the TSX 60 index by a long shot. Moving on, we have Global X, which I just did a video on covering their entire lineup. It's a very, very complete lineup in terms of covered call ETFs. They have all the indexes now, leveraged, unleveraged. They have the all-in-one, so obviously the 5 indexes, and I'm showing you the leverage ones first, but of course they have non-leveraged versions as well. You have USCL, which is the S&P 500, QQCL, NASDAQ 100, 2 top indexes in the US, CNCL for the TSX 60 for Canada. Then you also have a developed international or outside of North America, things like Europe, Japan, Australia with EACL. Then you have the emerging markets, EMCL, and again, take out the L, replace it with a C, you have the non-leveraged versions. And then you also have the all-in-one, which combines those 5 indexes together, EQCL or EQCC if you don't want the leverage version. So very, very complete lineup of covered call ETFs, a lot of index ones. There are also some sector-specific ones as well, and I go over them in the latest video, episode 2 of this 3-part sponsored series from Global X Canada. Make sure to check it out. They also have some fantastic bond ETF, right? MPay, SPay, LPay as well. So they got, all your covered call needs are covered with Global X's big lineup here. But in terms of any news on any distribution increases or decreases, nothing yet. They've been relatively very, very stable. There is some on BMAX. BMAX recently did increase their distributions again, which is fantastic. So it was started at 10 cents, then it went to 10.417, and now it jumped to 11.5 cents a month. So congrats if you own BMAX. BMAX is a multi-asset income ETF. So there is leverage, there is covered call ETFs in there, but it also has some fixed income. It's about 70% equity and 30% fixed income in there. So fantastic again. If you like some fixed income, reminds me a lot of HBIE. It's kind of a similar type of product here. Moving on, we'll go to the non-leveraged index-based or diversified funds. You have ESPX and ETSX from Evolve, of course. Very nice low fee, very, very simple. You got the S&P 500 with up to 33% covered calls. Same thing for this one, except it's the TSX 60 index. I know many of you like it. If you don't like leverage, these are some great options. Of course, you have BMOs all in one. BMO doesn't have any leverage funds, but they have ZWQT, which is their kind of all covered call all in one as well. Bitcoin and Ether has been tanking as well, just like with the overall market. This is a mass sell-off, right, of more risky assets, so they say. So obviously, people are selling off their Bitcoin, Ethereum as well. So in terms of income-oriented funds, of course, we have BTCY, ETHY, .B for the non-Canadian hedge versions. I personally switched my BTCY to BTCY.B. But in terms of distribution changes, nothing yet for both of them as well. So moving on to closed-end funds and split funds, you have Canoe EIT, which of course is still the king, still 10 cents a month. As of the latest NAB information, still trading at a small discount. So again, I recently came out with a video about Canoe EIT. I do a little summary about it. Should you sell it to swap into other higher yielding funds? Make sure to check out that video if you do own EIT. A lot of people in the community love it. They're going to stick with it until the end. Hey, I don't blame you. Very, very consistent returns. High returns, 20% leverage here, so very similar structure to a split share fund here without that $15 unit NAV rule. So Canoe EIT continues to be a very, very good long-term investment. Of course, these guys obviously know what they're doing. In terms of Brompton split share funds, you have GDV that's no longer at a small discount, unfortunately. Well, actually, it is. Sorry, what am I talking about? This is, of course, as of Friday's date. Of course, the Canadian stock market is closed today, but as of August 1st, GDV is still trading at a discount. You could pick some up at 10.03 when the net asset value is higher. It's at 10.28. So you guys know that GDV is my personal favorite split share fund in terms of diversification and stability. It's never missed a dividend. But there's also some other ones, a lot of financials focused, but always make sure to compare the stock price to the net asset value, and you want to try to get them at a discount. But as much as you can, or at least near par. But again, don't invest in split share funds if you're more of a newer investor and you don't understand fully how they work, would be my recommendation. But still, GDV, great option here for Brompton. You have the Middlefield ones. Middlefield is the only split share fund provider that has never missed any distribution. You also have ENS trading at a small discount right now. You see that right here. This is of course as of the August 1st date, so we'll have to see when it gets updated by tomorrow, I'm sure. You see here ENS at a small discount. Only Enbridge in here. You have RS, which I have a massive position in RS because I know real estate's undervalued. That's just my personal opinion, so I've been buying a lot of RS. Trading at a premium though, right? It's trading at about $12 and it's worth about $10.97. But hey, unit NAV way past $20, so I believe I don't think it's ever going to miss a distribution in my opinion. Then you have the newest one, IS, which is trading at a massive discount, you see here, which is typical for newer split funds, which mostly has pipelines, telecom, infrastructure, really boring blue chip stocks in those sectors in the newest split share fund from Middlefield. So moving on, you have the Quadravest ones. I only covered DFN, FTN, and BK. So the latest updates on these, or the latest NAV, is as of July 31st. I could pretty much guarantee you that DFN is again under $15 unit NAV with the latest market crashes and volatility that's been happening in the last week. So again, remember what you're investing in and how these funds work, and remember these are highly leveraged. They definitely have more volatility than 25%. So that is pretty much it for the overall landscape. Not crazy amount of changes again this month. There's BMAX raising the distribution. Harvest distributions increases have taken effect for the August payouts. So in terms of what sectors I think are undervalued, well, really take your pick, but I really feel the one that stands out to me that took the biggest beating in the last month is technology. So obviously the S&P 500 and even more so the Nasdaq 100 could be great pickups, things like HYLD, even HDIF. They have a lot of technology. Things that are more US focused will, of course, have more technology. ESPX as well, right? But if you really want to try to capitalize, and again, I feel technology is definitely the sector to get in now because it took a massive hit. There are some technology-specific covered call ETFs. The only leveraged one right now is Harvest's HTAE, so that could be a good pickup. They also did a massive distribution increase to 15 cents. So you probably, when the market opens tomorrow, I know this video is going to come out Wednesday night, but my estimate is that maybe the yield is going to be past 12% here on HTAE. So that could be a good one if you're looking just for technology. Another one, and I do have a video planned, I do have a Q&A planned with Evolve to talk about QQQY and QQQT, is QQQY from Evolve, which is basically what they've done. It's a NASDAQ 100 index, but only the technology companies. So you have about 42 stocks in here, 42 companies, just the tech companies of the NASDAQ 100. And of course, this has taken a beating lately because the NASDAQ and technology stocks specifically have taken a beating. So this one went to 28. Obviously done really well in the last year, but you see a big drop lately. So this could be a good one also to pick up. What's interesting about this one is that it's index based. The management fee is pretty low at 0.5 and the yield at $24, which I'm sure it's going to hit $24 or less than that tomorrow when the market opens, because this should go down. You have a yield of over 16%. So this is by far the highest yielding technology covered call ETF. So you have this option, you have HTAE, you got a bunch of other ones. You have TXF from CI. I don't really talk about the CI ETFs anymore. You also have QMAX. Don't forget that there's also QMAX from Hamilton here, which is their technology specific covered call ETF. Don't forget that QMAX, a portion of QMAX is in HYLD, in HDIV as well. So, because technology is such a big part of the American stock market, if you just buy the overall American stock market or something that has it like HYLD, you'll get indirect exposure as well. But don't forget, if you're buying something sector specific, everyone, you are taking more risk. You're taking more sector risk compared to buying the S&P 500. You know what I mean, right, by that. So that's it for the overall view. And yes, there's other sectors that could be considered undervalued, by the way, like maybe financials, technology, energy. So really, when there's a massive global sell-off, really everything gets on sale. So it's really up to you to decide what to buy. Do you want a more stable and consistent and safer, lower volatility portfolio? Then you would probably stick with diversified or index funds and not have any sector specific funds, or make them a smaller position. If you're willing to take a little bit more sector risk, my personal choice this month is probably going to be technology, tech stock. So again, the US listed funds episode is going to come out Sunday, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership if you're interested in the elite membership. And even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.